Ren, is this thing working? It's working,
Yes,
bro.
bro. We're
Cheers.
back.
We're back for another afternoon beer discussions, second for the week. I think the first one was mildly successful.
Yeah, well, we're back. So something must have gone right.
Well, we got the recording up, I guess. We're back for afternoon beer discussions, unedited, uncut, up late in the afternoon. All things. Well, the rule is, Ren, one topic about, I guess, something interesting that's happened today in the markets, or I think you've got something planned for today. I'm going in blind in this one.
One topic over one beer. That's the rule.
One beer only. And last time you hung up on me because I think you finished your beer early and left me hanging at the end.
That's the game.
That's the game.
Well, it's not really a game, but that's what we're doing here.
Yes. So
you're wearing the Equity Mate shirt again. Good to see. I have a pale imitation of a stand-in.
Yeah, you're
plain white shirt.
You're closer than you were last time we recorded, and I don't know what it's going to take for me to convince you to get on board the brand bandwagon. But considering you're probably sitting next to a box of 20 merch t-shirts.
Well, people might want to buy them after they see you wearing them, so I don't want to sully the merchandise.
Yes, you're right. They are flying out the door. You can buy them online or hit us up.
Those shirts count as an asset on our balance sheet, and as soon as I start wearing them, then that's me stealing from the company.
Maybe our goodwill will increase if you and others start wearing them.
Could you hear the birds in the background?
Yeah, pet cockatoos.
Loud, yeah.
Anyway, we're here to talk markets.
We are. So, quick recap of some of the markets this week. Australia traded basically flat, 0.3% up. So we're recording this on Thursday after markets closed. So for the 4 days of the week so far, actually for the 3 days of the week because it was Easter Monday,
yes.
And then the US, the US is up about 1%. So both markets that we watch the closest relatively flat. I'm going to talk to you about a company that stood out to me on one of the screens that I ran, and I did some research on it. I think it's a particularly interesting one. Before we get into that, though, anything that you want to talk about that's caught your eye this week in markets or anything like that?
Nothing major that we won't sort of cover on the podcast. I guess what I'm interested in is tomorrow China are releasing their GDP data, which I think is going to be very interesting. A, if it's truthful, but B, we should start seeing the first impact.
Bryce Lesky coming out firing. We're about to get doxxed. We're about to get a lot of Chinese Twitter bots following us.
It's going to be interesting to see because I think they're they were the first country to suffer the consequences of COVID-19, and it'll be a good indication on the true impact of COVID-19 on GDP. So looking forward, well, not looking forward, but going to be interested to see what those numbers are. So stay tuned. We can probably discuss that next week.
Well,
so what do you got?
Listen to this for a segue. China is fast getting the mantle for the most hated country in the world. Yeah. And I want to talk about the most hated company in the world.
Not bad. I'll pay that.
Yeah. You see what I did there? So this company was rated the worst company in America back-to-back years. It got the double in 2012 and 2013. It was rated the number 5 most hated company in 2018. And its corporate account owns the privilege of having the most downvoted comment in Reddit history with 683,000 downvotes. The second most downvoted comment in Reddit history, 89,000. So
what?
they have got first place with a bullet, about 600,000 more downvotes than the next best comment. So that's the little preamble in terms of how we know they're so hated. I'm going to throw it to you now. What company do you think takes the mantle for most hated and most downvoted?
Corporate account. So I guess the key is 2012, 2013, back to back.
So you can eliminate some, like Saudi Aramco probably doesn't have a strong Reddit page. So
yeah, that's true. Can I do 20 questions?
yeah, but 20 is probably too long. So let's do 5 questions.
Did you say that it was in the US?
It is in the US. That's question 1.
It's a US company. Is it in tech?
Yes.
It's in tech. Are we users of this company?
Yeah. Yes. Well, yes.
Okay. 2012, 2013. It's not Facebook, is it?
No. That's a good guess, though.
Look, I'm going to have to... Is it in... No, I'm going to have to pass on this one, bro.
Oh, come on, mate. You're pretty close.
Am I?
Yeah. Well, I mean, you've got American tech. Just keep whittling it down.
We're users of it.
That one might be a bit of a red herring. I'm a user of it. You used it.
TikTok.
No.
You are a strong, avid user of TikTok.
That is the most loved company in the world.
You're
I see where your confusion.
You're a user of it. I have used it, and it's a tech company. Is it a social platform of some description?
No. Mate, remember, you've only got one. Oh, you're fine. All right. So the company that I want to talk about today is Electronic Arts, the video game manufacturer.
Yeah, EA.
Yeah. Who is... I didn't actually know this before they showed up on my screen and I started researching them, but hated. Seriously hated. Like,
what?
To a potentially unreasonable level. And I'm not a gamer, but I do play FIFA, and that's one of their games. But yeah, they hate it. So
for what reasons?
The reason that they're hated, one is the way that they make money now is they do these things called loot boxes, where essentially you buy the game, and then to do anything in the game, you basically have to do heaps of microtransactions. So they've kind of taken, what phone games are known for, and introduced it to these games. The most downvoted comment in Reddit history was about one of their Star Wars games that I think they were defending their process of heaps of microtransactions, and it just got savaged.
It just goes to show how many the power of the gamers once they all start getting behind each other.
That's it.
Unbelievable.
That's it. I think they also have a reputation of just like buying indie studios and potentially not treating them well and stuff like that. So one of the most hated companies in America and the world.
And who actually votes on this if they get the award 2012, 13 and 18?
I don't know. Some newspaper. I think 2018 was USA Today. Not sure about 2012 or 2013. I mean, it was in the article, but I just didn't write it down. So I was going to say, if we move to the investing side of the company.
Yeah, I was going to say, I'm interested to know, A, what screener you were using, and B, where it showed up. What were you specifically looking for that brought this stock up?
So there's a few things that we keep saying in this in our podcast and now in our video, and we in this downturn we're looking for companies that will survive through the short term and then thrive in the long term. And so that's companies that have a strong enough balance sheet, low enough debt obligations, lease obligations, all that stuff, and enough cash or liquid assets on their balance sheet to get through a period where they may not be making much cash, and then that have the, strong enough business and, the competitive advantages to really thrive in the long term. And so I think I was screening on some growth metrics, their current ratio, potentially their PE. I can't really remember, but anyway, they came up and they looked really interesting. Now they're probably a company that will actually do quite well in this downturn. I mean, speaking personally, we went and bought the latest FIFA game because we were going to be locked down. So potentially they're going to do well through it all. But yeah, the company, it looked amazingly cheap. And so I started looking into it a bit more. At one stage, it was trading so it's currently trading at $113, $114. It was in the 80s. It was trading at $87 at one stage.
How long ago?
Like a month ago.
Oh, right. Okay.
So it fell about 23% when the rest of the market fell into the mid 80s, and then is now up 31% from there. And it's actually higher than it was at any point in the year previously. But when it was in the 80s, it was trading at a price to earnings ratio of 9, which is incredibly low when you compare it to some of its competition. Activision Blizzard is trading at a 33 PE, Nintendo at a 25, Take-Two Interactive at a 42. So its PE was crazy low. Its PE is still low. Its PE was 12. Its PE now is 12. And so it sort of sparked a bit of exploration. Its numbers look interesting. Last 5 years, it's compounded its revenue at 7%. It's compounded its free cash flow at 18%. And then its earnings per share in the last 5 years have compounded at an annual rate of like 98%.
Whoa.
So I need to look more into that number, because that number is so high that it seems like there's
unbelievable.
Potentially there was an acquisition, or there's like an accounting thing or something. But the revenue number at 7% and the earnings at 98%, potentially they just found a way to strip heaps of cost out of their business, or who knows, maybe loot boxes are great for the bottom line.
Making cash,
Yeah. But that's an interesting one that I haven't looked at, but the number is pretty phenomenal. And then you think about the company. So then you think about the two criteria that I introduced: survive in the short term, thrive in the long term. It seems to be in a really good balance sheet position in the short term. It's got a current ratio of 2.8, which means it's got more than enough short-term assets and cash to cover any short-term debt obligations or anything like that, more than double what it needs to cover its short-term obligations. So,
and to clarify, that 2.8 is a reflection of how many years?
No, 2.8 times the amount of short-term assets compared to short-term obligations or short-term liabilities. So basically, it's not going to have a cash crunch in the short term. So survive through the short term looks like a good one. It also will keep making money through this period. Thrive in the long term is an interesting one for me. I don't know heaps about gaming, other than I'm heaps better than my housemate at FIFA. But they seem to have a bunch of really strong franchises that you would expect can continue to pump out games every year. And, there's enough people that will buy the same game, just slightly updated.
Yeah.
Kind of like Apple can pump out an iPhone every 6 months and people will buy it. So some of the franchises...
I've seen advertised on Instagram heaps at the moment is The Sims. And
they own The Sims.
Yeah.
That was your favorite game.
Back in the day? No, it wasn't.
That's actually why Instagram are targeting you with that.
You know what? It's because a lot of people have been around lately have been talking about The Sims, and there's that weird thing where phones listen to you, right?
Yeah. So, as well as your favorite game, The Sims, some of the other ones that they have, so FIFA, which we spoke about, which is the big soccer game that produces a new version every year. Madden, which is the NFL game, same thing. They produce a new one every year. NBA Live, I think, is the second best NBA game. And don't come at me, NBA gamers, because I don't care. But I think NBA 2K is supposedly better, but NBA Live is another one that they pump out every year. Then some other ones that I've heard of, Need for Speed, Battlefield. They have the rights to the Star Wars games. So it seems like they've got a lot of pretty strong gaming franchises that they can just monetize, basically. Pump out new games every year, get people to pay for them. So, yeah, I sort of did a bit of research on it, and I haven't bought any, but it's definitely on my watch list.
Nice, bro.
I mean, the two things for me that I want to understand are, why is it trading at such a cheap price to earnings compared to a lot of its competitors?
Yeah.
Because it's PE of 12 compared to, its closest rival is probably Activision Blizzard, who's trading at 33 PE. And then the second thing is, how is that earnings per share number so
high,
growing at such a quick rate? And I mean, the first thing I looked at was, have they been buying back shares? Is their share numbers shrinking to make their earnings per share number look better? And that hasn't been the case. So it would, it'll be an interesting one to look at. And I'm sure people know, and hopefully, because we're on YouTube now and people can comment below this video and tell us why.
And what software are you using or program are you using for your screens?
Well, currently we're unsponsored on that, so I don't know if we should be giving anyone a free plug.
This is true. Don't do it. Don't do it. We're also unsponsored for beers, so
true. Yeah, that's an obvious one.
Yeah.
We need a beer sponsor, and we need stubby holders as well.
Big time. Big time.
But if any data providers looking at you, Bloomberg, want to give us a free terminal and pay us. But yeah, I mean, look, in all seriousness, we'd love to be sponsored, but there are also plenty of free screeners. So you can just Google stock screener.
Yeah.
And once we are sponsored, we'll come back, edit this part of the video, and I'll answer your question on brand.
But that's breaking the rules of the no edit
true.
part of this. So now I just have one question. Do you know roughly what time of the year it received the award for the world's worst company? Because I can see in 2018, and unless you know otherwise, it dropped from a high of $148 to 69 over the space of about 5 months. So a 50% drop almost.
Wow.
So if that was the fault of the award, you better hope that they don't have another one. Yeah. Powerful award. Hold on.
We start doing our most hated list.
No, that's a good find, bro. So maybe we'll add that to the Equity Mates hypothetical portfolio watch list, which we are simmering away in the background.
Yeah.
And we've got big plans for
type of content that we're working on.
Mm.
But yeah, I thought it was an interesting one to keep an eye on. I mean,
nice.
It would have been great to buy it 3 weeks ago and have ridden it up 30% in 3 weeks, but
to be honest, bro, you could have done that on almost any stock on the exchanges at the moment. So I guess
it would have been great to do it on any stock.
Yeah, I guess if there's any lesson to go by, it's hoping that you have the green thumb of investing, I guess, and any stock that you chat about on this show will go up just like Kathmandu has over the last couple of days since he spoke.
True. This is a really obscure reference, but there's a movie, Good Luck Chuck, where he dates a girl and then she gets married with the next guy she dates. Maybe that will be me with stocks. Good luck, Ren. I talk about a stock and it goes up.
that could be an ETF.
And then we get CEOs on the podcast to get a stock price bump.
And then we'd just be done for insider trading, wouldn't we?
We don't have to
Market manipulation. Market manipulation.
True.
Anyway, bro.
One of us have to finish our beer, otherwise we're just going to sit here and keep talking.
Bye.